welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Lori Graymont. Lori is the founder and CEO of Summit Assets Group, an innovative real estate investment company. She's been working in real estate for 20 plus years, since she was 3 years old. Well, anyway, Lori started out by helping her mom and dad rehabilitating properties. She's really good with a drill and a hammer. She says her husband married her because her power tools were better than his. Summit Asset Group helps to connect investors with opportunities with bulk bank foreclosed properties, which are known in the business, I understand, as REOs.
Correct.
Okay, and so that's what we're going to be talking about today: investing in bank foreclosed properties, or REOs. Before we get started, I just want to caution our viewers that this is just an introduction to a complex area. Requires a lot of study and due diligence. They do whole seminars for a day or whatever on this stuff, and so we'll be talking about more details, but anyway, just be aware that we're just scratching the surface and it's the beginning of an ongoing conversation. Lori, thanks so much for being my guest today.
Oh, Michael, thank you for having me. I appreciate this.
Yeah, it's a pleasure. Okay, well, let's get started with some of our questions here.
Okay.
Why is this a great time to be thinking about investing in bank foreclosed properties?
Well, if you consider what's happening in the marketplace, most of the properties out there are owned by the bank or they're short sales, and so there is plenty of opportunity for purchases.
So a lot of inventory available.
More inventory than the public can purchase right now.
And I guess what it really comes down to is the price can be right.
See, and that's what is happening. You know, when you have a surplus of items, the price comes down, you know, supply and demand. And so that's what's happening in the marketplace. There's no better price than right now.
That's great. Okay, so can this actually be an affordable area of investment? I mean, we're talking about investing in real estate, for goodness sake.
Okay, so first of all, if we expand our mind horizon from just the state of California to the whole nation, what's really amazing is that you can get houses in the price range of $10,000 that are actually houses, 4 walls, roofs, and plumbing, heating, and you can live in them.
It'll even hold up the roof?
Yes.
That's amazing.
And, you know, it used to be, you know, maybe in 2005, most of these houses were in the $150,000 range, but because of the surplus of houses, the banks cannot get them off their books fast enough.
Unbelievable. And so, folks, we're in Silicon Valley, San Jose area, San Francisco Bay Area, and a startup home here is maybe $500,000.
Yes.
So to be able to buy a home for $10, $20, $30, $40,000, it just seems unbelievable.
It does. It seems unreal.
Yeah. Okay, well, how are these bulk REO packages created?
Okay, so the process is that a bank will foreclose on a home. They get the home back on their portfolio, they list it with a real estate agent, and it'll sit out on a listing maybe for 90 days, and the agent says reduce the price because it hasn't sold. And so then it'll be out there another 90 days, and the banks have asset managers that have to decide, all right, how do we move these off our books? And so an asset manager will group together a bunch of these assets that they can't sell through the regular chain, and they will sell it out the back doors, what is referred to. And it's a bulk list. It means you buy everything that's on that list for the price that you negotiate with the bank, but you have to take it all. Good, the bad, and the ugly. And so it's a bulk list.
Okay. So do you think that you should have experience with other real estate investments before getting involved in investing in these REOs?
Okay, so first of all, you need experience in other real estate. You need a steel stomach.
Okay.
You need nerves of steel in this business because you're going to find things that you never thought were possible. You're going to have a house that's burned out, a house that just got demoed before you closed on it, but now you get the demo bill. But in the midst of all of that, because you're buying a package of homes, you're going to get the gems, and it's the gems that carry the entire package.
Mm-hmm. Okay. So how has this bulk foreclosure area changed over the last year or so?
When we first got started in this business in 2008, you used to have to buy a package in the size or range of about $100,000. And I know a lot of people think you have to pay more than that, but again, we're talking Midwest, Southeast homes. And that would get you 10 to 15 homes. Well, now there are so many players like hedge funds and pension funds that are coming into the market buying directly from the bank. With the whole idea of flipping them to the end investor, you can buy one home now for maybe $10,000 or $15,000. So you can pick and choose, and you can buy just one home. So you don't have to buy 10.
Oh, that's great. Wow. Okay. So, how does your company help investors who are getting started in this area?
First and foremost, we educate people. You know, we've been in the trenches for a couple years, and so that gives us a chance to share the knowledge that we've gained. We educate people how to buy off from the list. We also supply the list where they can buy the inventory. We teach people how they can buy one or two properties in a coaching situation. We can even give people a business in a box scenario where we give all of our tools to them, and they can be up and running in 90 days.
That's kind of amazing. Okay. And so I guess a big thing, though, is that you can have people like you actually hold the person's hand and lead them through this process for the first few homes so that they get the idea of how it all works.
Yes, I think it was Ben Franklin that said, if you think education is expensive, try ignorance.
Right.
This is not the business to try and do it on your own. This is the business to be either coached through or to already have had experience in it. Because there are so many little catches that you might not be aware of that if you don't have somebody coaching you through, it's going to cost you a lot of money.
Right. Okay. So what types of properties are in these packages?
So it used to be that most of the homes were in subprime neighborhoods. That was where the defaults started mostly. But we know that the mortgage crisis has expanded to regular neighborhoods that most people would call an Alt-A neighborhood or an A neighborhood. And so those loans have started to default. And so they're fairly decent working class, to middle class neighborhoods where you can find these homes now.
Well, that's kind of encouraging. So you've been actually seeing the scale going up.
Yes.
And yet the bargains are still there.
Yes.
Wow, that's great. Okay. So what are the minimum cash requirements for investing in this area?
Okay, so like when I mentioned before, when we started, you needed $100,000 and you were going to buy 10 homes. And that was awfully intimidating to a lot of different investors.
Right.
And so now you can come into this game for maybe $10,000 for a house. But I always tell people you need to think of investing like a business. Mm-hmm. You would never start a business without cash reserves.
Right.
And so if you had maybe $25,000, that would be a good place to make sure before you start that you've got that much reserves, $25,000 total. You can buy a house and have reserves with that.
So one of the things is there's going to be carrying expenses. There's a good chance you're going to need to do some remodeling for this
exactly.
place. And so you may have $25,000 available with the idea I'm going to buy it for 10. I'm going to be spending maybe $6,000 or $7,000 to fix the place up. I have to pay property taxes, utilities, and so forth while I get things set up to rent it or while I'm trying to sell it.
Correct.
And so you've got to have that operating reserve in order to do this properly.
Exactly.
Yeah.
Exactly.
Okay. So if the bank wasn't able to sell the property, what do you do that's different?
Okay, so let's talk a little bit about why banks can't sell these properties.
Oh.
So part of the reason is that the price has dropped down below a price point that makes it profitable for them. So if you have a house in the range of $60,000, with the new regulations, it's very difficult for a bank to write a loan for $60,000 and make enough money to make it profitable. So for them, they prefer to just keep reducing the price. And so they reduce the price and they crush a neighborhood. But what do we offer? When we purchase the house, we fix it up and we offer it out to the tenant as a lease option, or an opportunity for us to sell or finance them if they want to own. So we offer what the banks don't, which is the lending.
So you actually, so what's part of what's going on is that a bank really probably isn't interested in carrying a mortgage for $20,000
No.
or whatever.
Yeah.
So right there, you have a problem that you can't get the money from the bank in order to do it unless you have an alternative way of collateral, whatever. But as a seller, you can do a seller carryback.
Right. So we go in and we purchase these properties for cash. We fix them up. And then depending on the neighborhood and the type of house it is, we'll either do a lease option or we'll do a land contract. Now, a land contract in different parts of the country is called agreement for deed in California, or bond contract. It's simply seller financing. It means that I'm going to let you live in the house, you're going to make payments to me, and when you're done making the payments, I'll give you title. And so it's a great way for people who would never have the opportunity to own a house in the current economy to become homeowners. And it's the same thing with the lease option. A portion of their rent goes towards a down payment so that in a couple years, if the banking system turns around, they can get financed. If not, we'll sell or finance them.
Okay. Okay, so just when you say we, what you mean is yourselves, but also your investors that you're coaching.
That's right. We teach investors to do the same thing. And you know, what's better than getting like 9 or 10% on your money? Yeah. So
one thing I don't see in the questions here, but quite a few of your investors, I guess, are actually keeping these properties.
They are.
And so what sort of rents are we talking about that you may be able to get on a property like this?
So our typical deal is that we usually buy in the Atlanta market, and our all-in cost on the house, that's the purchase of the house and the repairs, is about $18,000, and we're seeing $700 to $750 for rents on those houses. Our lower end houses at the $10,000 to $15,000 range, we're seeing $650 to $700 in rents.
So when we talk 700 in rents, because the other things with 650, it's harder for me to multiply.
Okay.
so 700 in rents, that's like 8,400
a year.
And so that's less than a 2-year payback.
Yes, our average payback is 22 months.
So I think that's just amazing to think of real estate.
Yes.
That you could own like outright. Now, obviously there's going to be some other expenses in there. But still, to have a cash flow like that is really amazing.
It is.
Yeah. Okay, well, how do you handle properties that are located outside of California?
So a lot of people will not venture outside their backyard when it comes to rental properties. They think that they want to drive by them and pet them and say, oh, I love my rental. And, you know, do they really want to be fixing the toilets when the tenant calls? No, they really don't. If you think of this as a business, the first thing you do is you realize that banks have been doing this for many, many years. And they don't go look at the properties or drive by or touch or feel them. And so what they do is they hire professionals in each of these fields. So we do the same thing. We connect into the same type of services that the banks have. If we want somebody to go drive by and take pictures of it, we have services that do that. If we want somebody to give us a value, we call a BPO service, means broker price opinion service. They'll go give us a value on the property. If we want something repaired, we call a repair service agency. They give us names of contractors and we have them go out and do the repairs. And so we manage it just like a business would manage it.
Okay, so so in a sense, part of what a person is doing when they're dealing with Summit Assets Group is they're getting $1 million Rolodex.
They are, absolutely. We teach them the techniques of staying safe when you're working with out-of-state contractors, and we teach them how to find the names, and we even give them names to start with so that they can get up